Hello guys, welcome back to another Linktree trading video. In this one we're going to be doing some in-depth stock analysis on BlackRock, ticker BLK. Now firstly, why is it down around 2% on Friday's close? The reason for this was they did release their earnings. It was kind of mixed. Some things did beat estimates, some things didn't. We did see revenue slightly miss, not by any large number, and we also saw some big news of BlackRock finally hitting $10 trillion in assets under management. So I think with all this kind of mixed review, it's probably why it kind of sold off, a bit of uncertainty, but it probably didn't sell off as much as you saw like JP Morgan and stuff sell off, for the reason being it hit that big nice number of $10 trillion assets under management. So to now get straight on to then the technical side of analysis, we'll then be going on to a clean daily chart, see is there any gaps that need to be filled. We will use these as price targets, and we can see really there is no gaps. I mean, we did have one here, but what you did see, and this is why we use gap fills, on the reaction you get when price comes into these levels. You'll see at around 8.35 we had a gap fill. If we change this to a 1 minute chart, you'll see once we kind of came into this level, that's where buying pressure came in, and then it tried to hold above this level. So that's really why we look for gap fills, because they're usually good areas to be locking in profits and usually a good way to catch bottoms. We do now have though a bit of a gap fill at around 8.67, so this could be an area where you personally look to lock in maybe some profits or move a stop if you're getting long before that level. So we can see we've already come down and broken the second deviation on the 4 hour. This would have been our low risk buy zone on the day. Also, we are now below the first deviation on both the 4 hour and the daily, and again that means we're already in somewhat of an oversold area, and an area where we wouldn't mind being long, but we do prefer to buy straight on that deviation level, because then we kind of get the best upside, and usually we'll be down on the position for a less amount of time. Now if it does continue lower, where would our next buy zone be? 820, and this will be a very key level. If it does continue down to 820, the reason that is a key level is it's the third deviation on the 4 hour. You don't tend to see stocks really break outside of their third deviation range, especially on blue chip and large caps such as BlackRock. So if it comes down to 820, that's considered a very low risk long. And again, if it does so for some reason push down any further around 810, you've got the second deviation on the daily, again very low risk, and at an extreme low 735, if it comes down to there, again would be very unlikely to really break down to that level, but if it is, that would be our final level that we would be looking to get long at. Now where would our targets be? So obviously if you're buying at say the 820 mark, you could be using the above deviations to maybe lock in profits, or at least move stops, so that you know the 850, the 865 or so, all of these levels you can use them like that. But the optimal one and kind of our final target would be 920 to 960. Now why do we give these levels? As that is the statistical mean on both the 4 hour and the daily, and the one we're going to be more focused on is 920, because that is the closest statistical mean we have, and the reason we use it as our final target, especially on trades. If you're investing, then you can kind of ignore this a bit more, but it's still a good level either way, and that's because stocks always try to reverse to their mean. So once you get a stock sell off very heavily, it will most likely reverse to its statistical mean, and again if it gets very oversold, you would expect it to reverse to its mean. So that's why we lock in profits from there, because stocks try to reverse from there. And the reason we don't like holding past that level is because then it turns into a bit more of a gamble. It could shoot up, could shoot down. It's going to be some more, usually down to more of news basis and not so much of a technical pattern when it comes into a statistical mean. Now if BlackRock continues up and you're looking to lock in profits or find short locations, then we'll be using kind of the 955, which is actually one we won't use. So sorry, ignore that. If it's still within the statistical mean zone, for example, this 955 is below the 960, which is statistical mean of the daily, we would ignore that as a short bias location, because it's still in a kind of a gambling kind of zone. So we'd wait for it to break past it and at least wait till 988, which is where we would justify our first short location. 955 though, if you are on a long-term investment, you could be looking to lock in profits at that level. Again, if it continues higher around 1038, 1020, 1115, 1050, 1200 basically, and at a very extreme 1,268, all levels where we'd be looking to lock in profits or get short depending on what kind of position you have in BlackRock. So I hope you enjoyed the breakdown on BlackRock. Hope to see you in the next one, and that's it. Peace.
I go dumb for that money, dumb for